Hello, this is Gill Fielding, and this is what's caught my eye in the media this week. First of all, I want to say that coronavirus is a great leveller of the human race. And because of changing employment circumstances, you never know whether the waitress used to be a senior manager somewhere or your supermarket delivery driver used to be an airline pilot. And that's fantastic. I think the pandemic has done more for social mobility than a variety of governmental initiatives, because when the chips are down, when we're in crisis, when we're in difficult situations, everybody is in the same boat. And that's wonderful, really, because it unifies us as a human race. And it makes us less aware of status and those things that don't really matter, and makes us more aware of people as human beings. And we're all in the same difficult situation. We're all fighting to earn enough money to feed the family. And it's one positive thing that's come out of coronavirus, and it's a great leveller of the human race. And I embrace that, and I hope it continues when the pandemic is over. Now, we've had some interesting stats announced this week. First of all, there's been another estimate as to how much money the UK population has saved up during the pandemic. And estimates now range from about 200 billion to up to as much as £1 trillion. And that's a ridiculously huge amount of money to be stuffed under mattresses all over the UK somewhere or another. Now, I say stuffed under the mattresses because, in all honesty, there's not a great deal of point of putting it in the bank, because it was announced this week that the average interest rate has now fallen to a ridiculously low 0.11%. And that's an average over UK savings accounts. So even if you have got a bit of money, in all honesty, is it really worth putting it in the bank? Now, one person who probably would want to put that money in the bank is Warren Buffett, because it's been announced that his company, Berkshire Hathaway, has, now let me get the number right, $145 billion sat in cash in the company account. $145 billion. Can you imagine such a huge amount of money? Now, again, 0.11% on your savings isn't much, but if you've got that amount of savings, it would amount to about $160 million a year. So it probably would be worth going down to the bank with that money. And it just goes to show it's all relative, really, but I'm sure Warren Buffett would prefer interest rates to be 1, 2, 3, 4 or 5%, because just imagine how much more money he would get, or at least the company would get. So we're all saving up, we're all about to spend it, so the government thinks, and boost the economy. There's been estimates today that the economic growth could be as double digits this year. Recent estimates have been in the 7-8% range, but they're thinking now it could be closer to 10, because we're all going to go out and spend those savings, get them out from under the mattress and out of your socks, or wherever else you've been hiding them. I also read this week about wedding licenses, because apparently there are 300,000 weddings that didn't take place during the pandemic. And obviously, lots of would-be brides and grooms are itching to get to the altar of some kind and get married. And the UK government has now been issuing licenses to some of the most odd places, like a boat and the headquarters of the London Regiment or something, and Selfridges. And of course that got me giggling, because I could just imagine going into Selfridges and doing your shopping and getting all your shopping bags, and then trolling over to the wedding place and getting married whilst you've got all your shopping stacked around you. So shoes and spouse in one easy move. And it got me thinking about my godparents, who are in their 80s now, and they got married just after the Second World War. And they got married on the way to doing their vegetable shopping. So they actually had their potato bag with them when they got hitched. And again, it just goes to show that in times of crisis, we do what we can, and we do it where we can. And suddenly all those social pretexts and pretenses sort of go out of the window, because we're all keen just to do what we can. And as I say, where we can. And if that involves shoe shopping or potato shopping, whilst you get married, well then so be it. And good luck to all those wonderful brides and grooms that are about to get married, wherever it may be. And then I just wanted to talk briefly about what I call the rental okey cokey. I've been a property investor for a long time, and I've seen every fad, fancy, fashion come and go. And I've realised that with the benefit of perspective, which is what I have, that as long as you buy and invest in the right property for the right reasons, you'll always be okay. And even if there's a temporary blip or a temporary change, it comes back. It doesn't take long to come back, as is evidenced by the current rental okey cokey. Because when the pandemic started, rents started to drop in city centres because people were moving out to the suburbs. So suddenly demand for rental properties in the suburbs shot up, rents shot up as a consequence, and the reverse happened in city centres. And now it's only 11 or 12 months later, the reverse is happening, and suddenly there's been an increase in demand for rentals in city centres by up to 25%, and that's big cities like London, Edinburgh, Leeds and so on, as people are now moving back in, and obviously rents will go up there and rents in the suburbs will soften a little, I guess. And the reason I think it's important to note that is that these things that happen tend to be short term. And although at the beginning of the pandemic, there might have been some inexperienced investors, let's say, who were terrified by the fact that, you know, the rental market was changing, it's only 12 months and it's all come back again. So you're okay. As long as you buy the right property for the right reasons, you've got the right demand, and it's you know, you've chosen well and as a professional, then you'll be okay.